So how do you get started investing in stocks? That's the question we're going to answer today. Let's move forward. Welcome to The Plan Ranger, where our goal is to provide you with informed insights and a reasonable approach to managing your personal finances. Now, as we were setting this channel up, one of the questions I was talking to a friend of mine and said, hey, what questions would you have? And of course, one of the very first ones is, how do I get started investing in stocks? Stocks are always one of those things that tend to be a very sexy point of conversation within the world of personal finance, which I guess isn't saying much because personal finance just isn't that sexy. But within our world, this tends to be towards the top of the ladder as far as that goes. Now, in today's little segment, we're going to be covering some very basic things. And this is operating under the assumption that you have no experience investing and have no idea what the heck you're doing. So we're going to keep it pretty high level, pretty 10,000 feet, let's just say. And also keep in mind that if you've never invested before, this is not where you should be starting in the world of personal finance. So in other words, if you're just getting your life in order, your finances sorted out, things like that, this is not where you should begin. Not saying you should turn it off or not listen or anything like that, but you need to start at some other spots first. In other words, you need to address things like your budget and emergency fund and yada, 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 all that basic stuff. We're jumping past 19 steps here into this part. But if you feel like you have those things in order, or if you just want to know more, then we'll, again, dive into how you should get started investing in stocks. So this is one of those instances where the best way to get started is simply to get started. And what I mean by that is you're just going to want to start by setting up a gambling account, if you will. Now, I'm not suggesting you're actually going to gamble with this money or anything like that. No. But when I say a gambling account, what I mean is you're kind of investing in your future to learn more, and that you should basically just be ready to lose all of this money that's going to go into it. So we're talking a small amount of money here. If you want, $250, $500,000, whatever. This is money that you're going to use to learn from, right? And essentially what you're going to do is you're going to buy just a handful of companies, 3 to 5 companies, but we'll touch on that in just a second here. When you set up that account, you're going to be setting it up as what's called an individual or joint account if you're married, but essentially it's going to be non-qualified. I'm telling you this, digging into this part of the details, because what I don't want you to do is use things like your IRA or your 401k or money that you're actually going to need for the future. That type of money should be invested in a different way that should match more with your risk tolerance and your time frame. And there's a number of factors that should go into how those funds should be invested to have a better built portfolio. This is simply you setting up money so that you can buy some stocks and kind of learn more about the market and investing and so on and so forth. So you're going to set up an individual or non-qualified account. In this instance, or married if you're finally, if you're joint, a joint account if you're married. But you're going to want to buy 3 to 5 companies. Now, which companies should you buy? Honestly, I don't know. That really depends on you and what you think is going to happen here. But what I recommend is you find 3 to 5 companies that you're familiar with, that you know their products, you've used their products, you like their products, or you believe in this company, what they're doing, what their growth potential for the future. You might not know much about solar power, or you might not have solar panels on your house or anything like that. But maybe you want to invest in a company that does that focuses on that, because you believe it's going to be the thing of the future. Ideally, though, you want to focus on 3 to 5 companies that you're really familiar with, that you understand what they do. Now, if you're wondering, should you be digging into their financials? Should you be, aren't we jumping past some things here? Shouldn't I be looking at things like their financials or their prices? Or I always hear things about ratios. Those things are important. They're extremely important. But for our purposes right now, that's going to be irrelevant, because if you're really this new to investing in stocks, then even if we talked about those things and even if you looked at them for these 3 to 5 companies, you probably still wouldn't know what you're looking at. And even if you did, it wouldn't be enough. If you're new to this, even if you're experienced in this, you're not going to find the thing that the Wall Street analysts miss. The people that look at this all day long, that that live and breathe this stuff, you're probably not going to catch the thing that everyone else is missing. So just set that expectation aside. What you're looking for here is to learn from owning these companies and to see how they grow and how their prices move and how your investments move with time. That's really the goal here. So Yes, there's things we're skipping. No, you don't need to look at their charts. No, you don't need to look at their financials at this point. Right now, it's just about finding companies, buying them, putting them in your portfolio, and then observing how they act over time. How long should you have these companies for, in your portfolio? For this experiment, if you will, I would suggest you hold them probably for about a year. You want to be able to ride these companies through an entire business cycle. You want to see their filings. You want to see how their prices move when they pay dividends, or if they do a stock buyback, or inversely a stock split. You want to be there to experience these things. And while there are systems out there where you can do this without actually putting money into them, it's going to be a more tangible experience for you, a better learning experience. Frankly, if you're playing with live ammunition, if it's your money actually in the thing, you're going to know, you're going to pay closer attention to what's actually happening there. So you're going to pick these 3 to 5 companies that you're familiar with. Now you just need to hope that they're publicly listed. See, while most people think that every company out there has stock, sells stock, and all that, that's simply not the case. Your company needs the companies that you're looking to buy need to be publicly traded companies where you can buy their stock. Truth be told, only about 15% of companies out there are actually publicly traded. The other 85% more or less are all privately owned, meaning you can't buy their stock. You can if you're Warren Buffett, but not if you're you. Or me, for that matter. Access to private securities like that's a little more complicated. We'll talk about that in another video. But for right now, just know that you need to find companies that are publicly listed. So during this year that you're holding these companies, you want to probably set up like Google alerts for them or something. You want to be able to follow the news for these companies and see what affects their stock prices. Also, over the course of that time, you're going to be learning from other sources as well, like reading books, websites, magazines, or even from the resources wherever you place the trades themselves. So if you go to a discount broker, an online brokerage house, for example, they're going to have a plethora of resources for you to look at to learn more about investing in stocks. Same if you have an advisor or a broker that you're placing the trades through, they're going to have resources for you to learn from too. If you're looking for good books to read, I might recommend things like The Intelligent Investor by Benjamin Graham, or A Random Walk Down Wall Street by Burton McHale. Both of those are great places to start for new investors, if you want to say. The Intelligent Investors may be a little more complicated, but it would give you a really solid foundation in the basics of fundamental investing, which is looking at things like financial ratios and that piece of investing in companies. Finally, I want to give you just a few words of caution here. First and foremost, you're going to be buying common stock. You're not going to be doing it in a margin account. Those are just some basic things there. So no margin, which we'll talk about that later. But if you see it, just avoid it for right now. So you're just going to want to put the money into your individual account, buy common shares, and just hold them. One of the things you want to avoid is, at least in my opinion, would be any source of information out there that's telling you you need to buy these 5 companies, these 7 companies, these 10 companies. Anyone who's telling you in particular which stocks to buy, you should probably avoid. I don't know exactly what their motivation is by doing those things. Maybe they're trying to get you to subscribe to their newsletter or watch their channel, or maybe they own those shares themselves and it's, it could be a pump and dump scheme. Who knows? But, it's interesting that these things tend to pop up on the internet, things like buy marijuana stocks or buy, cryptocurrency stocks. These things tend to get out there all at once so that people, generate a lot of buzz about them and buy them. So generally speaking, anything that you're seeing along those lines, direct recommendations of which securities to buy, probably avoid that. I mean, at least for the time being. Maybe you can find somebody who knows exactly what's going to happen, but I doubt it. Honestly, I do. At least in my experience, I've never seen anybody that was trustworthy enough to say, do this or do that. You could just try and follow whatever Warren Buffett does, but that's tricky in and of itself. Realistically speaking, just, and this is where Random Walk Down Wall Street would come into play. Whatever companies you buy, just hold them, see what happens. Chances are, if they're strong, established names, they're going to do well over time if you hold them long enough. So, well, that's all I have for this particular segment. Like I said, try to keep it basic and easy. If you have any questions, please feel free to leave them down in the comments below. Click subscribe to join the Plan Ranger community, and hopefully we'll be able to find a way for us to answer one of your questions here on the channel. So please feel free to send them our way. We'd love to have that. Until next time, thank you very much for taking the time. We hope this helped.